All right, let's dive straight into the fascinating psychology and strategy behind the greatest investor of our time. And we're going to kick things off right at his most dramatic moment. Picture this. It's September 2008. The global financial system is literally collapsing like a house of cards. Lehman Brothers is bankrupt, and massive banks are begging for pennies. But there's one guy sitting calmly on a massive mountain of cash. Exactly $44.3 billion, to be exact. His legendary rule is what drove his every single move during this crash. Be fearful when others are greedy, and be greedy when others are fearful. While the rest of the world was in full-blown panic mode, selling off everything, Warren Buffett basically became America's financial ambulance. He was out there calmly shopping for the deals of a lifetime. Section 1. The ultimate boss move. So at the time, Goldman Sachs was absolutely desperate for cash. Buffett throws them a $5 billion lifeline, right? But he demands a massive 10% annual dividend in return. That's $500 million a year. And here's the best part. He locked the top executives onto the sinking ship with him. They literally couldn't sell their shares until Buffett sold his. If the ship goes down, the captains are going down first. Later, when Goldman wanted to repay the loan early to escape that daily interest, Buffett's joked that he'd hide in a cave just to keep the deal alive.
Section 2. Fear of poverty and beginnings.
But to understand how he got to this level of ultimate power, we have to flash back. Buffett was born in 1930, right during the Great Depression. His dad was a stockbroker who lost his job, throwing the family into severe financial anxiety. And this unpredictable, really stressful childhood environment created a deep, lifelong obsession with financial security for young Warren. He essentially vowed to make himself so financially bulletproof that nobody could ever control him or force him to beg.
Now, arbitrage is a fundamental rule of business, right? Buying an asset in one market and selling it for a tiny bit more in another. Well, Buffett figured this out at age 6. While other kids were playing with toys, he was buying packs of Coca-Cola for 25 cents and selling the individual bottles around the neighborhood for a 5-cent profit. That wasn't just a game. He was literally drawing up the blueprint for his entire life.
And this right here perfectly illustrates his compounding momentum. He quickly graduated from counting bottle caps to finding a new hustle in barbershops. At 15, he bought a broken pinball machine for $25, fixed it up, and split the profits with a barber. Next thing you know, he's got a whole pinball empire across town. Before he even finished high school, he sold the business and used the cash to buy a 40-acre farm. Section 3. Cigar butts to wonderful companies. So Buffett actually got rejected from Harvard Business School after a 10-minute interview. Devastated, he went to Columbia because he found out his idol, Benjamin Graham, taught there. Graham taught him the art of cigar butt investing. The idea is to find discarded, dying companies trading so cheap that they're worth less than their scrap value. You buy them, take that one last free puff of profit, and toss them aside. He followed this strategy religiously, which actually led to what he calls his $20 billion mistake. He found this dying textile mill named Berkshire Hathaway. He agreed to sell his shares back to the CEO for 11.50 cents each, but the written offer came in at 11 3/8. That's a 12.5-cent cheat. Enraged by this tiny ego clash, Buffett bought the entire company just for revenge. He fired the CEO, but soon realized he was now stuck holding a failing textile business. To escape that dying textile industry, he needed a totally new financial engine. He found it in insurance companies like GEICO, using a magical concept called float. See, when you pay insurance premiums today, the company holds that cash for years before ever paying out claims. Buffett used this massive mountain of free cash, this float, as interest-free gunpowder. It allowed him to fund his biggest, most explosive investments without ever borrowing a single dime from banks. But the real shift in his philosophy came from his brilliant partner, Charlie Munger. Ben Graham had taught him to buy fair companies at a wonderful price, those cheap cigar butts. But Munger totally flipped the script. He convinced Buffett that it's actually far better to buy a wonderful company at a fair price. This ideological clash was a massive turning point. Munger talked him into buying See's Candies, a brand with incredible pricing power. It proved that paying up for true quality is vastly superior to digging through the bargain bin. Section 4. Reputation, Crisis, and Principles. Every hero faces a major crisis, and for Buffett, that character test was the 1991 Salomon Brothers scandal. The investment bank was caught in a massive treasury bond scandal, and the government was about to ban them, which would literally bankrupt the firm overnight. Buffett stepped in as chairman, went to the Treasury Secretary, and testified before Congress with trembling hands to save them. Addressing the employees on national TV, he laid down the law. Lose money for the firm, and I will be understanding. Lose a shred of reputation for the firm, and I will be ruthless. He proved his principles weren't just for show, cementing himself as Wall Street's ultimate moral authority. I absolutely love this contrast because it shows how he completely blocks out the noise of the wealthy lifestyle. Look at this. The guy has lived in the exact same house since 1958, eats McDonald's for breakfast every day, and has sent exactly one email in his entire life. Yet he has a net worth of over $150 billion, made a massive billion-dollar bet on Coca-Cola in the 80s, and holds a colossal position in Apple today. He's so anchored to his core habits that his mind stays completely clear to execute these historic market moves. Section 5. Compounding of Knowledge and Age. If you walk into his office, you won't see a bunch of flashy screens and stock tickers. It's just piles of books, newspapers, and files. He credits his sharp analytical edge to reading 500 pages every single day. He treats knowledge exactly like compound interest. By letting it build up over 70 years, he's created an internal database that lets him spot opportunities that are literally invisible to everyone else. We got a real glimpse of this superpower when he met a young Bill Gates in 1991. Gates didn't even want to go to the dinner, thinking they'd have absolutely nothing in common. But they instantly clicked. At one point, Gates' dad asked them both to write down the single most important secret to their success on a piece of paper. Independently, without looking at each other, they both wrote down the exact same word, focus. That extreme, unwavering focus is their true secret sauce.
Section 6. Warren's True Legacy. Despite his unbelievable success, Buffett remains incredibly grounded. He talks a lot about a concept he calls the ovarian lottery. He humbly acknowledges that his specific skill, allocating capital, happened to be highly rewarded by the 20th century American capitalist system. If he'd been born in a different era or a different country, his skills might have meant absolutely nothing. He fully accepts the sheer luck involved in his journey.
And that deep self-awareness is exactly what drives his legendary philanthropy. Alongside his late partner Charlie Munger, he started the Giving Pledge, committing to donate 99% of his immense wealth to causes like global health and education. He has this brilliant philosophy on inheritance. Give your kids enough money so they can do anything, but not enough so they can do nothing. He's making sure his wealth actually solves global problems, instead of just creating a family dynasty. Warren Buffett's story proves that markets will inevitably crash. Technology will change, and trends will fade. But a strong, lifelong portfolio of principles will never bankrupt you. So I want to leave you with this question. What are you investing in your portfolio of principles today? Thanks for joining this explainer, and I'll catch you next time.